Morning, everybody. How are we all doing? Happy Friday. Morning, Danny. Morning, Soul Trader. So I'm really unorganized this morning. I've been to the gym this morning. I've literally just got out of the shower and I can't stop sweating. It's so hot. Morning, Danny. Soul Trader. Sebastian, Robert Timmins. I have to say your full name because I like your surname. Morning, Virginia. How are we doing? Right. So today is Friday. It is nothing special today news-wise. Yesterday was obviously the big news day. So we're going to have a look at what happened yesterday with news. We've had retail sales this morning for the pound, which came out not just negative, but a huge negative. As you can see, the pound not happy about that this morning. So very, very big drop on the way on the pound. Whether it continues or not, we'll have to wait and see. But yeah, very big move down. No ADRs so far today. There's a lot of weekly range hits, but nothing's hit ADR today. So if you look at the pound pairs, they're all actually the Australian dollar's very weak as well today. But yeah, the pound's obviously under pressure today. So potentially there's an ADR on the cards there. If you've missed the initial move on it, obviously you can get in on a pullback if it pulls back. But we'll wait and see what happens with that. So that's the only news this morning. Obviously, we've got Ueda speaking at 7:40. I think that's happened now. Yeah, so he's already spoken. So that's out the way. So that's pretty much it for news today. We've got the retail sales for the CAD and the Philly Fed later, but doesn't tend to do a lot retail wise. So nothing particularly exciting. I think it's going to happen this afternoon. If you scan through the news overnight, it's all still bubbling away with Israel, Iran and America as to whether they're going to get involved. Trump yesterday has indicated that he's going to make a decision on that in the next 2 weeks. Morning, Marco. Are you in Vietnam? So, I mean, 2 weeks is a long time to make a decision. You either need to do it now or you don't do it. So I don't get what he's doing. He's stalling, obviously, at the minute. So it's difficult to tell what the hell is going on with this situation in Iran and whether or not we're going to get a continuous safe haven run on the back of this. Trump believes this diplomacy is still an option with Iran, which is why he's kind of stalling. But he's going to make the decision within 2 weeks. You know, it doesn't really help anybody. Sorry, I can't stop sweating this morning. It's so hot. I'd literally, when you do an exercise class in the morning, it obviously burns, your metabolism goes through the roof. And I just cannot cool down for some reason in the mornings when I've done an exercise class. So if I sit here and sweat all morning, just turn the camera off. So basically that's the news this morning. There's nothing particularly exciting there. I got caught out yesterday by the early close. I completely forgot about it. I should have shut these out yesterday. I had trades on yesterday on the indices on the US. They were in profit when I looked at them about 5 o'clock. And I was like, shall I close it out? Shall I not close it out? We did this double bottom thing. And I was like, I might just leave them and see what happens. And I completely forgot it was early close. So obviously they all gapped up today and I got stopped out on all of those in a loss, which is fine because it's rallied. So, yeah. But yeah, so down day so far today, a down day yesterday as well. Couldn't get anything on the DAX and the FTSE. Terrible markets at the minute. They are absolutely in rotation. Nothing but rotation. Look, so that was yesterday's open. Yeah. And then New York. We moved down for the New York Open, but shocking. You can't do anything with these markets at the minute. They're not breaking out. They're not going anywhere. They are literally stuck. There's no movement. So yeah, tricky, very tricky situations at the minute. So we'll see how we get on today. See if we can recover this loss from the overnight gaps from on the DAX and the FTSE. As you can see so far, 5-minute ranges are in, but we're inside bar and we're gapping. Look, there's no volume. we're gapping. So if there's no volume, it's not necessarily a bad thing, because obviously if they do want to move and get orders filled and there is no liquidity in the opposite direction, we get a lot of movement as they reach for order volume. But really at the minute it's very low volume. So we'll see where we go, but not looking great today. So there's no ADRs to look at today. There's no RSI extensions at all. Everything is kind of sideways. So I'm going to whiz through all the pairs, have a look at where everything is. Yesterday, I closed out some of my oil trade. I closed the lowest order, and one of the, I put two, I think it was 2 orders on there, and then a second one. After this move up in this area here, because I wanted to get a decent size on. So what I decided to do, obviously, when I scaled in on the pullback into propulsion, I basically took the lowest trade off, and I took one of those off just in case we go into a kind of a range and we don't break this high. Yesterday, we did close above the high for a couple of hours, but we've gapped back down into it today because Trump's obviously said, I'm not going to do anything for a couple of weeks, potentially. So there's absolutely no reason to think that oil is going to get disrupted. Iran may still do that, in which case, obviously, this trade is going to go through the roof. So that's why I'm holding it. It is a war trade, conflict trade, as they're called. I've got 5 on. I will scale out of more today. So the lowest order, if we push up and break yesterday's high, I will close out another portion. So if we get an ADR run today, we'll see what happens there, but may or may not. Exercise. Was it the morning market yoga session with the ladies in the park? No, it wasn't. No. No, not at all. I do a lot of combat. So that was this morning. When you lose the ability to sweat, that's when you need to worry. Yeah, it means you're dead, I think, doesn't it? Morning, Joe. But the trouble is, I've got a very high metabolism. When I do exercise, it literally takes me half an hour to an hour to stop sweating when I sweat. And I do work out very hard. So it's one of those things where when it's hot and you're naturally hot and want to sweat, my body cannot cool itself down. So I have a shower, a cold shower. And as soon as I get out of the shower, I just go and start sweating again. Horrible. Anyway, I bet you all wanted to know that. Hopefully you're not eating your breakfast. Morning, Gregors. So we're going to whiz through the pairs this morning, have a look at everything, see where everything's going. 15-minute candle is going inside bar on the FTSE. We've broken out long on the DAX. Whether or not we go anywhere, we'll see. Struggling, isn't it? Really struggling today. No volume. Never mind. We'll come back to that in a bit. Right. So starting at the top, if there's any pairs you want to look at specifically in detail, let me know. Current positions I'm on, obviously oil long, pound US dollar short. I've already banked some of that. I've got this position that's constantly in profit on it, which I'll have a look at the pound US dollar in a minute, but I might take some more of that off today just in case something big happens over the weekend. Euro Swiss got 2 on. It's just flip-flopping around. Euro CAD and the Swiss yen, I can't get any traction on those. So up 5% over the last 5 weeks, but really struggling at the minute to get any movement on anything still. This is why, all our RSI dashboard is completely flat. There's just nothing really moving, and any movement we do get is very, very, very short-lived at the moment. So Aussie New Zealand, I really, really, really was close to getting in short on this yesterday in this propulsion gap test. I wish I had, but it was a breakout from a multi-week base. So I get the feeling this propulsion gap is going to hold and we're going to bounce up. Aussie and New Zealand both moved an awful lot. Over the last sort of 24 hours, obviously with all this conflict stuff going on, commodity pairs tend to get pushed and pulled a lot. It's very hard to know which direction though. So I kind of get the feeling that's where we're off to now, as we've broken that high. It's taken a long time to break that. I think we'll get some momentum out of this. So I'm going to start a long position on this, Aussie New Zealand. We are double bottoming where we are now. So I'm going to go long one. Actually, I'm going to put a buy stop on the hourly. So if you look down lower time frame, my buy stop, I want just above the reversal alert, basically. So on the hourly, roughly there. So I'm going to start position long on the Aussie New Zealand, and I'm going to look for a push up into propulsion on that. Aussie US, that's really stuck. That was the trade yesterday. And again, I was looking at that yesterday thinking, I like the look of this because of the support resistance area that we're at the moment. But I don't like the fact that we've got this propulsion gap, which is holding to the downside, and this one, which is untested down here. So I get the feeling this is range high. Range low, I think, is probably going to be down in this area here. Where we are at the moment is kind of middling. Not really a great place to take a trade from. So not interested at the moment. Morning, Mark. Robert, can you look at Aussie CAD? Yeah, we'll get to that in a sec. We'll just go through these 7 at the minute, and then Aussie CAD's the next one. Swiss yen, shorts on at the moment. Got 3 shorts on that. Average is there, as you can see. I've already banked on it. So I've taken that one off and did partial drawdown control of 25% on that position, I think it was. Next entry's going in if we break yesterday's high and hold it, which we haven't. So if we break the high of the day today, that is going to be my next position in. If we get any escalation in Iran, we're down. So the Swiss franc, actually the Swiss franc will rally, so will the yen. But this is the problem at the moment. The Swiss franc, this is the worst pair to be in safe haven times, in hindsight, looking at it. It's just the wrong thing to do, isn't it? Trade the Swiss against the yen when there's a safe haven run going on, because you can't tell which one's going to win. But so yeah, I'm short on it, waiting for it to drop. Euro CAD, that's going nowhere. I'm in this short. I've already banked on it once. It's just not going anywhere. So I took that off in case it didn't go anywhere, and it didn't go anywhere. And it pushed up, got another one on, went up, came down, sat around for a week. Now we're pushing back up into propulsion. I suspect we're going to come down like this. Just I can't get it down to get a profit. So what I'd like it to do is come and retest this high of the week, which will be my next entry, which will bring my average up. And then I can get out when it comes back down and retest these lows or that propulsion gap. But it's just not going anywhere. It's stuck. Oil price, obviously, if the oil price does continue to rally, that's going to help the CAD. So I could really do with some positive Canadian retail figures this afternoon. If we can get some decent numbers on the CAD, that might help it along a little bit. And then I want a rally on oil, and then I'll be out. But it's just not happening at the minute. Euro Swiss, same thing. I'm in this. I've banked it already here. Already done one bank on it. But as you can see, it's an entire month sideways. So I've taken off 2, added back, just sitting there. So I'm in profit, out of profit, in profit, out of profit. Nothing much I can do with it. So my average is here. My target is 1 ADR, which is 51, which is basically lows. So somewhere in that little propulsion move, about 150 ADR is my exit. But Euro pound, I can't find a reason to get in this at the minute. It's where I'm interested in shorting it, but we have had a reverse alert and a retest actually out of that propulsion gap. So I'm short pound and short euro. So shorting this, I'm doubling my euro exposure short, and I'm hedging myself because I'll be long the pound. Not a bad position to be in. So basically, that propulsion gap is holding its reversal alert, potential retest. We've just had really bad news on the pound, though. So that isn't the best thing to do after that retail news. That retail news today was really bad. We were 1.3, forecasting a negative 0.5. We got a negative 2.7. Just going to quickly look at a website to see what the average is on that. I can't show you this site because it's under development, but I can give you the figures. Pound retail, that's medium impact. No, it's not. It's high impact. I was going to say, couldn't find it. Retail sales. So the biggest positive differential. So that differential there is 2.2. The biggest positive differential we've had is 1.3. The biggest negative differential we've had is negative 2.2, which is today's. So this here is the largest negative differential we've had on pound retail for the last 12 months. So that is as big as it gets as a negative for the pound. So shorting that now is not a good idea, as you can see. So I haven't got the analysis on how that affects long term, but obviously short term, you don't want to be entering long positions on the pound right now. It's just had a very, very big drop. So I'm just going to leave that short on there. So the pound US, obviously I'm already in short, as you can see. I've already banked on it, and I've already done drawdown control on it as well. So I've done DD control on 2 positions, which I closed out on Wednesday, banking those, using the profit of those to do a partial drawdown. And I need next leg down into there to exit the entire position. But we're stuck again sideways. And this bounce here is slightly worrying because it's these highs. So this resistance turn support is the bounce point, which is worrying because it means that there's a potential to move up into there. But the pound's just had some really bad news. So some good news on CAD retail might help the dollar along, and that basically will pump me down today. So, well, we'll see what happens. Oil, obviously, I've covered already. So Aussie dollar CAD. Is this summer trading? Not yet, no. No, summer trading's not yet. July, typically. It's when typically it's when the schools break up is what we class as summer trading. So it's a good couple of weeks yet. It tends to be early July, mid-July, it really starts to slow down. August is awful. September can be slow, but tends to pick up. So August is awful usually. July is a bit hit and miss, but we are so much more algorithmic now than we used to be. So summer trading is kind of when you used to get a lull in volume because traders weren't there. We are less reliant on that. 80% of stocks now are traded electronically, and they're all algorithm. You know, all the orders are algorithmically processed. So I think it's less impactive now, summer trading. But if you look at seasonality studies, it's always the same. You get range bound activity in the summer, but you know, we've had range bound activity for the last month. Yeah, I mean, it can't get much more range bound than this. You just buy the lows and sell the highs at the minute, and you just keep doing that until it breaks out. And then obviously you just mean revert the breakout. It's just very difficult to know what to do at the minute because the market's not acting like it usually does. But then again, we've got Trump in charge, and we've got potentially the third war. Well, not potentially, we have got the third war just kicked off. We've got Russia, Ukraine, we've got Israel and Gaza, and we've got now Israel and Iran. And we're soon to have US and Iran, which will bring Iraq and someone in, and it's not going to stop, is it? All the time that's happening, you're going to get fear in the market. Fear means stock indices down, and uncertainty, which means no high risks taken, which means just execution of orders, which means ranges, and that's happening at summer. I get the feeling that at some point we're just going to go boop. We just can't make money, can we? Anyway, it's not going to happen. Aussie dollar CAD going nowhere at the moment. So this is obviously in the middle. There's nothing to do on the RSI. You're bang in the middle of range high low. Yeah, so there's your range highs. There's your range lows. You're bang in the middle. Could go either way. Canadian dollar, obviously oil reliant. So if we do get strength on oil, which I'm hoping that we do, you want to be selling it. If we don't, commodities up Australia. So it's a difficult one. This is a double commodity pair. So it's difficult to know what to do with this, but we are bang in the middle of nowhere at the moment. So right now you can pick whichever you like. So you may have taken an RSI extension. It didn't really get extended. There was a long down there, 4 hour, dead. It's just not doing anything. It's nothing to do with it. Sideways. Best thing you can do with this now, flip a coin. Heads go long, tails go short. If it goes the opposite direction, scale in at the highs and get out when it stays in its range. That's all you got with it. Nothing else to do. Aussie dollar Swiss, very much the same. Sideways, no RSI extensions, nothing. It's just dead. Obviously, the best thing to do in this type of environment is to be selling everything against the Swiss franc, because when it kicks off, if it kicks off, that's what's going to happen. You're going to get a safe haven run. The safe haven run is always in the Swiss franc. So big, strong push to the downside. If it happens, as I say, somebody asked me on MQL5 marketplace overnight. I'm trading a prop firm with the market reversal alert EA. I'm using the M5 hedging set file. Which are the best pairs to put it on to keep the drawdown low? Like, you're asking me to predict the future. If I knew what the best pairs to put a particular strategy on would be, I'd be a multi-billionaire. Yeah. What happens in the future is unknown. This is either going to, on conflict escalation, do that. No conflict escalation, do that. Because the Swiss have just reduced their interest rates to 0, meaning that the Swiss franc is weakening, which means this should go up. But it's not going to go up all the time we have conflict, because it's a safe haven. It has money pushed into it. So I've just realised I didn't cover yesterday's news, did I? Unemployment rate stayed the same in Australia. Nothing happened there. FOMC, we got exactly what we were expecting. The Swiss did reduce to 0 rates, as I said they were probably going to do. Nothing exciting happened there. The pound did not change their interest rates. Nothing exciting there. Although we did have a much more mixed opinion as to whether we should drop or not. So that was slightly bearish. So we've got basically slightly bearish there, but we didn't drop the rates. So all the news from yesterday was basically exactly what we were expecting it to be. So nothing happened yesterday, did it? Exciting at all. So nothing to do much with the Aussie Swiss. Aussie yen sideways, nothing you can do with it. Again, if we're going to go into conflict, that is the move. Swiss and yen will both benefit from safe haven runs. CAD Swiss, same thing. This is a tricky one because oil will benefit from conflict, which means that the Canadian will rally. Swiss will benefit from conflict through safe haven run, which means the Swiss will rally. So if this powers up because of conflict, it ain't going anywhere. So this isn't the one to trade at the moment. CAD yen, same thing. Safe haven run, oil. Not much you can do with it. Range highs, sell it. Range lows, if you get there, buy it. Look at propulsion gap sells, propulsion gap buys. That's pretty much all you can do at the moment. When we get to areas we've bought at before, get in. But don't expect to get much more than an ADR out of anything at the minute because it's all stuck sideways. Euro. Interest rates frozen for the next 2 to 3 years. Dead. Nothing much you can do with it. The euro is not going to move. Australian dollar is going to push the euro around. We've just had a reversal alert on it as it tried to break out of this weekly high. It hit the monthly level and got out of that, but it has failed again. So it does look like market structure is long at the moment, but it's going to take a week to do something like this at the minute. It's just not moving. So not a lot you can do with that. I'd just be watching and monitoring RSI extensions on the 4 hour and the hourly on it, and to see if you can get RSI extensions and get entries there. So there's your RSI extension to the upside on the hourly shorts. But, look at what you got. You've got roughly an ADR, just about. You probably got in somewhere around about there. You got about an ADR. That's all you're going to get. Euro yen, very much the same. We're not really going anywhere strongly. We have had this big run on. We had that yen weakness come through for a week or so as the euro was kind of having a good week. So it's taken advantage of it. But again, safe haven run is going to drive it down. The euro has got no real strength at the moment because of interest rate freezes for the next 2 to 3 months. So But then again, neither is Japan. They're not increasing their interest rates either. So the only thing that's really going to happen here is this is either going to continue to grind, or if we get some kind of conflict, it's just going to turn around. I'd be much more interested in shorts on it, just because we're up at the highs at the minute. You will get a big move on the yen at some point, but it's too expensive to hold. It's just not worth trading at the moment. Euro New Zealand sideways. Not a lot you can do. Really good area to sell at right now. You've had a reverse alert and retest on the hourly. Look. Beautiful. Oh, I was ready to hit the button then. I'm not trading this at the moment, but beautiful M pattern reversal double top. Yeah, propulsion is holding, so we need to break that propulsion gap. If we break that propulsion gap, we're coming down to here. So you've got roughly from where you are. This is a reversal retest. So there's your M pattern. From there down to here, 143. That's an ADR. Whoop-de-doo. You might get an ADR out of it. Same as everything. It's just not moving. Euro US dollar, really sideways at the minute. Watch this propulsion gap for a bounce today, because this is a nice low break. We have also retested this area, and this is where we are now. So if you get that reversal alert today, potentially that is going to continue market structure short. Yep, so you've got high, low, lower high, lower low, lower high, lower low, double top, double bottom, or double top, lower low. That's what you're looking for. So you should be able to get down to ADR on that. We're going to need some US dollar strength though, so Trump's got to be nice. Pound odd. This one is moving. We've had quite a lot of movement on the Australian dollar and the New Zealand dollar. The pound is obviously very weak at the moment. The Aussie's weakening massively today. You can see because the pound odd is going nowhere. So you know the pound is weak. That tells you the Australian dollar today is weak as well. So with this move here, we are holding this undoing of the Trump tariffs. This is our new kind of balance. We had a price discovery to the downside, which we went into balance for a good week or so, came back up into balance, pushed down, and we look like we're putting market structure short in to come and test that monthly low. So I would say it's a good looking short from exactly where we are now. This move here is roughly a 50% retracement on that leg. So it looks like a good area to get in short. Reversal alert, you're not going to get one because of that massive Australian dollar move. Yeah, so I mean, you're not going to get a reversal alert on it. You've got to go down a lower time frame to find an entry. I mean, that's beautiful. So yeah, if we break the low of the day and the previous day's high, which is here, you're going to come down. So it looks good for shorts below that level. But yeah, it's a tricky one. Again, pound CAD, same thing. Pound weakness at the moment. Canadian dollar strength and Canadian dollar oil. So if we get up into propulsion up to ADR, that would be a good short out of there. There's an argument for taking a short here as well on some kind of weakness. So dropping down lower time frames. You've just had the reversal alert going in. So this propulsion gap here should act as resistance. That will give you your M pattern reversal. 30-minute reversals in, hourly. You've had the reversal. It's all kind of, it's very, very tight out of propulsion, that reversal. So it's the break of that support, which then got added to. Yeah, then they couldn't get any higher, then we broke down. So this is the first test of this propulsion move. That is the second propulsion move. This is a better propulsion gap because it broke a low. So that is actually a really good short entry there. And we got weakness on the pound. So pound CAD looks good right now. But obviously just bear in mind, if that oil price drops, that's going to happen. So because the Canadian dollar will weaken. But if that oil price rallies, that will happen. Oil's holding at the moment. We've got a gap down situation. So I would say today, short term, in the next few hours, we're probably going to rally oil to fill that gap. So I think we've got a good chance of, you know, same as this, look, just going to fill that gap. Market doesn't like gaps. Inefficiencies in the market cause offside positions for banks and institutions, which they need to get balanced. So when we find a gap overnight, typically they do try and fill them. So obviously we're bullish on oil at the moment, so there's very high probability of that long going on today there. So that's pound CAD, looks good for shorts. Pound Swiss is very, very sideways at the minute. Again, I'd be much more inclined to do that on anything Swiss franc. So Swiss franc strength on fear. We are with the fear and greed index at the moment. It is moving from, it's just moved from greed into neutral, which means basically fear is creeping in, stock markets down, safe havens up. That's a safe haven. If the Swiss franc goes up, the pound goes down against it. So it's shorts on Swiss, shorts on pound Swiss. We are holding these lows at the moment. So you're potentially looking here at a double bottom causing a wedge pattern, which is bearish. So looks good for shorts. Pound yen sideways. Again, yen pairs very hard to call at the minute. Yen is fairly weak at the moment. But obviously we just had a weak pound, so lower high basically, potentially going in back at these highs. So again, this is a great example of balance and failed price discovery. So we've got this high here, sellers, high, sellers, high, sellers, high, sellers, high, sellers, price discovery, attempt to break out long, failed. Yeah, sellers fully in control, but we have got a lot of buying pressure. So this is a wedge breakout pattern, but we've just had very bad news for the pound and we're in conflict, which means you tend to get yen strength. So this looks great for shorts from where we are right now. You've just had a reversal alert on the hourly. So structure's broken to the downside. So potentially you don't want to break that high today. Look for a push back down into here today. Pound New Zealand sideways. So we've been stuck here for a good couple of weeks now, just going like this. The New Zealand dollar and the Australian dollar, you're going to, whenever we've got any kind of fear in the market, there's a massive move into and out of commodity pairs. Aussie and New Zealand both are. So, you know, that's basically what we're seeing there. Thanks for subscribing, Online Session Drummer. I didn't see you. I've got my volume turned off and I didn't hear it. Welcome aboard. Morning, Washcheck. Morning, Chris. Just catching up on chat. Marco, can you talk a bit more about your website that you're developing? I can. What is your, I'll do that in a minute. What is your meaning to open, sell and buy positions at the same time in ranging markets? What is my meaning? What do I think about it, you mean? And take profit from one and scale into the other position. Yeah, it's hedging, basically. So yeah, you can hedge. Up to you if you want to do it. I don't like it. But yes, you can. You're always going to get into one position. Basically, what you're doing with hedging, position trading hedging, what you're doing is you're just shotgun approaching the market. So you're saying, okay, if we go short here on this reversal alert, brilliant. If it doesn't work out, we will scale into another short at the next reversal alert. It will push down, give us a reversal alert long. We haven't got out of our short, so we'll take a long position. So we've got two shorts on, one long on. And what we'll do is we'll wait for the market to move in one direction and then we'll take one of them off. One of them is always going to go heavily into drawdown. I'd rather just be in one position. It's a great strategy and it works really, really well in this type of market. A lot of people are contacting me at the moment about it. It's funny how all my set files and my strategies, suddenly I get all these people contact me. And that one I just mentioned this morning that contacted me in MQL5 about the M5 hedging set file for the market reverse alert CA, third one this week, because the market's ranging. Everyone's seeing opportunities to play ranges. So they're like looking for range bound strategies. And they find a hedging range bound strategy, which works constantly because as long as the market's ranging, you're winning in both directions. But when it's not, you're squeezed. You're going to get squeezed like everything else. So I'm just not a fan. All I would ever say to anybody about any strategy, stick it in the back tester, test it, see it play out, watch it in visual mode, watch it take trades, look at the results, look at the drawdown, look at the profit. Is it something you would be comfortable with? If you're comfortable with it, trade it. If you're not comfortable with it, don't trade it. Trading is a personal thing. Some people can't stand drawdown. I position trade without a stop loss and people think I'm crazy. Yeah, that's how I make money. Other people make money with stop losses. Not many of them, but there's a couple out there that do. Great. If that's where you want to go, do that. Some people trade 1 minute charts. I can't bear them. I prefer to be up on hourlies and 4 hourlies. Everybody's got their own way of trading, and it's a comfort thing. If you're comfortable in a strategy, trade it because you'll be good at it. If you're uncomfortable, it means you've got too much risk on, or it's just not the type of strategy for you. If you try lots of different strategies and you can't find anything that's comfortable, maybe trading isn't for you. Yeah? This is an uncomfortable job. You're never comfortable. I'm never sitting here going, oh, look, I'm a grand in drawdown. Happy days. Because I'm always at least a grand in drawdown. Because that's my job, is to be in drawdown, because drawdown is risk. Risk makes money. That's the job, isn't it? How you put your risk on, there's a million ways, isn't there? So you have to just try stuff, test it. But that's what the back test is for, to give you confidence in a strategy. Where can I learn about macroeconomic trading? I can teach you that. I do it every day. I literally talk about it every single day in here. If you want to do a course on economics, it's Anton Creel. Do Anton's course. Not that Anton Creel. That's because I've spelt his name wrong. I can never remember how to spell his name. There we go. K. It's with a K. Institute of Trading Portfolio Management. Yeah. If you want to learn economics and how to trade properly, this guy is one of the best in the industry. He's ex multiple banks. He's ex Goldman Sachs. He will teach you everything you need to know about economics. But I would say get an economics degree, because the stuff that he's going to teach you is going over your head. It's hard, very hard. I use a dumbed down version of what I learned from Anton. Yeah, it's one of those things. Bear with me 1 second. Just 1 sec. I've just got a delivery just arrived. I'll be back. And I'm back. Sorry, I'm on my own today, and had to run up the stairs then after doing an exercise class. We're moving house next week, and there's loads of stuff being delivered literally constantly. I've been on Amazon. I must be Amazon's best customer at the moment. Like, I order something on Amazon. An hour later, one of the kids goes, "Can you get so-and-so?" It's like, yeah. Order it from Amazon. And the wife goes, "We need to get that. Can you get one of those from Amazon?" Literally, Amazon delivers 3 times a day at the moment. That was the first Amazon delivery of the day. I've got 2 more coming today, which I know of. Other stuff may have been ordered on my behalf. But anyway. Yeah, so economics, Anton Creel, is a great course. I've probably shown this before on stream. God, I need to find... Just going to find an endogenous driver analysis. Oh no, I'll do an exo analysis. Here we go. This is a good one. So this is... no, that's not a good one. Let's try... Oh, do not do that. Never mind. So this gives you an idea of what you're up against when you do this type of course. Okay. So this is an example of an economic scorecard, an advanced economic scorecard, which basically is how banks and institutions format economic data. So when you get this here, Whether that number, and that's what I just spoke about this morning when I looked up the statistics for this, for retail sales, the highest deviation, standard deviation from forecasts so far in the last 12 months is 2.2, and it's just happened today. This is the biggest retail market shift to the downside we've had in 12 months. Massively important. Banks and institutions will be adding that into their scorecarding systems today and going, negative pound, how much? We don't know. We'll give a score to it based on what's going on with all the other currencies and all the other fundamentals that are happening with the pound at the moment. It builds this massive picture up, and there's lots and lots and lots of different data that gets driven into the scorecarding system. All of these tabs I'm going through now, you have to learn in detail to get that, which gives you a number which says short or long. But this, if you don't understand all of this, you ain't going to do anything with it. At the end of the day, what you will get out of this type of analysis is exactly the same as that. A bias, right? So it's going to give you a bias as to fundamentally, right now, as of today, with that retail number for the pound coming out, should we be long or short pound? And it will give you a number, and it will say you should be short the pound. If the number on the dollar is a long number, you should be shorting pound US dollar. If the number on the pound is short and the number on the pound is euro, and the number on the euro is also short, you have got a short against a short, which gives you no financial bias, which gives you a range. So you should be looking for range-bound opportunities on the euro pound. How you execute those is entirely up to you, but all it does is it gives you a that, or that. Yeah. Moving average, if it's going up, it means the fundamentals are bullish. The market can tell you that. We know that. If the market is doing that, the fundamental analysis allows you to get in somewhere around here rather than somewhere around there on a breakout or somewhere around there on a pullback. So you get that advantage. You are first to market. Being first to market doesn't help you when the next fundamental comes out after you've pressed the long button and shifts the entire spreadsheet short. You've just pressed long and now it's flipped short today. How's that helped you? Because you're now the wrong direction. So it doesn't help you because it's either going to do that or that. It's always a 50-50. So I found that after doing that course and pretty much getting a degree in economics, it was no use unless you are a long-term speculative investment trader, in which case it's really, really useful. But there's lots of other ways you can measure this. COT report, for example. If you go and look at the Commitment of Traders report at the CFTC, they will show you on paper the positioning of all non-commercial bank orders, which means if the US dollar has a bias long for banks and institutions, do you think their fundamental scorecard says they should be buying it or selling it? Buying it. So all you do is you just look at the COT report and it tells you everything that's in these financial reports anyway. Because if the market is biased long, you buy it. But it changes every day. Today, if you look at the pound, I'm just going to look at my other website. I'm going to get told off if I show you this. Am I going to get told off if I show you this? I'll show you anyway. I'll show you some of it. So basically, this is an example of the pound, yeah? So this is all the latest news releases on the pound, yeah? So we had retail sales month on month, came out on the 20th of June, very bearish, yeah? Then we had the bank rate, which came out, no impact, same as before. That is no impact anyway. GDP came out bearish. That came out bullish. That came out bearish. That came out bullish. That came out bullish. That came out bearish. That came out very bearish. Yeah. So this is obviously not in the right order. This is not in date order. I'm doing it the wrong way round. Just going to read you the sentiment now. But basically, this is the latest news event here, which is today's one. Yeah. which has come out really negative at minus 2.7, which is very bearish. If every single one of these comes out bearish or very bearish in a row, you sell the pound, right? But if the next one comes out very bullish, the market's going up. So it changes every single news event. The bias changes every single news event. So having a long-term bias is useful as long as the biases on a day-to-day basis remain the same. Today, this is not just bearish, it's very bearish. Why? Because the standard deviation is 2.2. Yeah. If you look at the average deviation on retail sales, 2.2 is the biggest we've had. That's what happened today. So when you get the news coming out, for example, what have we got this afternoon? Retail sales for the CAD month on month. So CAD retail sales month on month. Obviously, that was the last one on the 23rd of May. If you look at the CAD retail sales, where's that red? That's interesting. That's the wrong impact level. The biggest negative differential we've had is minus 43. The biggest positive differential we've had is plus 66. The average differential is plus 2.5, which means that the vast majority of the time it comes out roughly in the middle. So if today we are forecasting a 0.7 to turn into a 0.2, so that is a 0.5 differential to the downside. If it actually comes out at a 0.93, which would be the largest differential we've ever had, the Canadian dollar is going to go through the floor, even if it's a medium impact event. But when you look at the long-term Canadian dollar and look at the latest releases that we've had on it, is that sorted in correct order? Yeah. We've had mainly bullish news. So we've had one bearish news come out, core retail sales. If that comes out as massively bearish today, it will probably start to undo all of this. So your bias today will change. So if you've been buying the Canadian dollar for weeks because it keeps going bullish, 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 today that's going to change. So having an economic overview doesn't always give you an advantage long term, because it's not going to be something you can rely on, because it's going to change every day. You can be buying the dollar. Whatever data you look at could say the dollar is bullish, the dollar is bullish, the dollar is bullish. Trump comes out and puts tariffs of 185% on China. The dollar's not going to be bullish. Doesn't matter what the data says. The data has changed today with one man opening his mouth. So it's useful, but it's not useful. But if you want to learn economics, that's where you do it. And this is what I'm working on with some other guys at the moment. I'm probably going to get into trouble. Is that kind of data analysis, and it's very useful for short-term movement. So what we are looking at is when you get a very bullish or a very bearish news event, or a deviation from a standard deviation from forecast, which is bigger than usual. What we're analyzing is the 1 hour impact, the 4 hour impact, the 1 day impact, and the 1 week impact. So when you get a massive number, which is a negative, like we've just had on the pound today, yeah, what historically on average happens after 1 hour, 4 hours, 24 hours, and a week? Yeah. If on average it goes short on that number for an hour, 4 hours, and 24 hours, you know that if you get a big deviation, standard deviation differential like that, you should just hit the short button regardless, not use a stop loss. And you can almost guarantee that within 4 or 24 hours, it'll be lower than the price you sold it at. So it's giving you that short-term intraday advantage by trading news. But you've got to be quick, because when that 2.7 comes out, within an hour, that move could be gone, could be over. It could just do that. And then in 4 hours, it's back to where it started. So if you've got a tick on the 1 hour and the 4 hour, you've got no, it was back to the starting price. You've got to be trading this on the 5 minutes, and you've got to be out within an hour. Yeah, so that's the analysis that we're doing, and it's using fundamental data to achieve that. So it's an interesting study, if you like. We're using artificial intelligence to do all the data crunching, basically. So, and obviously, I'm looking at ways to develop scalping strategies around it, really. Anyway, there you go. So that's what you do about economics if you want to learn it. But my advice, don't learn it. Just going to give you another thing that's going to confuse you. And it's a moving average. It's a long-term moving average. But just use a moving average because the banks have already done it. Yeah, you're better off being in a week after the banks, in the direction the banks are going, than you are trying to get in with the banks and figuring out all of this yourself. It's very complicated. Got an odd issue. Does broker contract size specification affect lot size calculation for the price action toolkit and the ORB? I'm getting huge lot sizes on 2-digit brokers in prop. Yes. I don't know. Pass. You'll have to do some testing, Mubo. If you test it in the back test, you'll get exactly the same results in the back test you will in live. So test it in the tester. If you need to adjust it for a broker, you then maybe do. Yeah. 2-digit brokers. The old way, the old price action toolkit and ORB version 1. I mean, you shouldn't, for a start, why using ORB version 1? It's awful. It's been superseded twice. Don't use it. You need to be using 2 or 3. The reason why 2 and 3 are better is because you don't have that problem. Yeah, so ORB version 2 and 3 fix the problem of 2-digit brokers. Price action toolkit, you still have to figure it out yourself, unfortunately. Morning from Pontevedra. Morning, Blue Trader. Difficult markets trading June. Yes, it has been difficult. I am going to carry on with my analysis at some point. We're on New Zealand. Difficult markets. Love that uncomfortable equals too much risk. And drawdown is risk. It is. Online drummer. I got an economics degree, and you can get all you need from Anton. Yeah, Anton's good. It's very good. And Ray Dalio, hedge fund legend. Yeah. There's lots of different ways to trade. And the thing you've got to do is, like I said, you've got to go and try stuff. You've got to learn stuff. You've got to see what clicks with you. If creating spreadsheets like I've just shown you, this is a standard deviation news. This is a standard news deviation chart. So if this is something that clicks with you and you can find a way to use this information to create a strategy edge. Everybody thinks a strategy is indicators. Strategy is getting into the market, applying a risk to a position. Yeah, you are either positioned long or short. You don't have any choice. You are either long or short. There is only two. It's a binary market. Your system is the mechanism that makes you press a button. Whether you use this data and a news event creating a standard deviation outside the bell curve, that is your strategy to press the button. That's fine. If that works for you, do it. But most people look for the RSI to be extended or the moving averages to cross over or a structure break below a low or a range to be broken out of. They're looking for indicators and patterns. All economic traders or news traders or that type of traders do is they use mathematical statistics to generate signals. That's a bad image, isn't it? I didn't mean to draw that. That's a bell curve. These are outside the bell curve. This is where you will be looking for information to make decisions. But yeah, so how you do it is up to you. But some ways are more complex than others for different people. Yeah, most people want the dumb version of, hey, I want something that draws an arrow on a chart and I'll press the sell button when that arrow appears. Absolutely fine. If that's the way you want to trade, trade. No better than anybody else because you literally have the same odds as everybody else. It will either go up or down when you press the button. That's it. There is nothing else. It's binary. So we were on your website, be a dumbed down version of Anton. Yes, sort of. It's just financial information. It's not my website. I'm working on it. But those sheets look too complex. Rocket science. Yeah, it's hard. It's one of those courses where this is a COT analysis, commitment of traders analysis, which gives you a bias overview. This is old data in here, but this is what I was talking about with the COT report. So there's so much data out there that you will just get overloaded. The actual course itself and the lessons, if you like. I'm just looking at the overview. There's 29 sections to the course. I would say they're probably an hour to an hour and a half each. And it literally is like going to a maths lecture, each one. It's not like my course where you've got like 12 hours worth of content that you can kind of get through. This is like 30 to 50 hours and there's an exam at the end of it. It's hard going. And to be honest, I came out of it at the end and went, that's brilliant. I don't know how to use it though. I do know how to use it, but it's, I think, overcomplicating. I've been doing this a long time and I think it's overcomplicating something very simple. This goes up and down and moves through time. If I press the button down there and I wrap risk around it and the movement goes my way, I can get out with a profit. Because there is a spreadsheet or data analysis system that telling me that the bias is long on this means I will miss all of the short opportunities. Every time this gets high, I will not take the trades short. I miss half the trades because I've got a fixed bias, which could change every single time a news event comes out. I don't think that's a good thing to have. So, this is why I don't use moving averages. Yeah. If there's a moving average going up, why shouldn't you sell it? You will miss that trade and that trade and that trade. Look how beautiful those trades are. Look how beautiful that trade is. This signal makes money. I'm not going to lose it because it says to buy it. Sometimes it will go up and it won't stop. Yeah. And the signal will fail every now and again. But so what? You've got risk. You apply risk to the market. You lose on those. But 80% of the time, the market does this. So if you've got a bias and it's doing that for 80% of the time, what you're doing is you're only going to take half of the money that's available to you. Bias is actually a bad thing, I think. And again, indices, I do not use a bias at all. Yeah. Hang on. I'm going to take a partial on the DAX. So, if you have a bias on the stock indices and your bias today is short, you miss that. Go with the flow. The market's going long, go long. Don't have a bias because the bias is going to be incorrect half the time because it's got a 50-50 chance of being long or short. Which is why I don't think it's necessarily a good thing to have, but it is a very useful thing for news analysis. But surely one cannot simply look at negative news plus positive news equals balanced. For example, red news on forex factories say housing sales is red, but does not mean anything more. During the financial crisis 2008, they all looked at that number. Yeah, what happened? It went down. So if you'd have followed the red numbers that came out, you'd have made a load of money. One indicator is a leading financial indicator, such as PMI versus GDP, which is lagging. Yes, which is why you have a weighting system. Yeah. So in here, which one did I show you? The androgynous. Right. So in here, there's a weighting system. Yeah. You'll notice that not everything is given the same weighting. So what you've just said there, PMIs will be given a high score weighting housing numbers will be given a low score rating. M2 money supply will be given a high score rating. Interest rates will be given a very high score rating. CPI, a very high score rating. So when the news comes out, you have what's called a temperature applied to the news event, which scales the weighting that is applied to the overall score. So interest rates will score a lot higher when they come out with a differential than a GDP number, which will score a lot higher than housing starts because it's rubbish and useless. But permits, building permits, have a very high score. Who'd have thought it? If you look at building permits in the US, that has a very, very high score. What's building permits under? Growth. Hang on a minute. I think it might even be yellow. There it is. Look, right? This is interesting. This is yellow, building permits, right? That is a leading indicator. It's yellow in Forex Factory, but it's actually one of the most important leading indicators we have. The reason being is building permits influences the unemployment market. If there are way more building permits issued, this is land owned by businesses and individuals in the US. If building permits are issued for building on those land, what do you need? People. Why? They've got to build those buildings. So it increases employment, which reduces unemployment rate. Reduction in unemployment rate affects CPI, which affects interest rate decisions, which affects market direction. So this is a hidden leading indicator, which a lot of banks and institutions pay a lot of attention to. Because if that goes through the roof, you know unemployment's coming down. Yeah. And what you also know is the PMI, Purchasing Managers Index, is going to go up because they're going to buy a lot of raw materials. Commodity markets will rally on a yellow news event that nobody pays any attention to. This is all the stuff you learn under the hood, and this is why it's so, I think, complicated and not necessarily 100% useful for most people because there is too much information. The guys that analyze this data are paid £125,000 a year to sit at Barclays and do this. Yeah, it's not a job you get with a BTEC diploma in computer science from college. An economics degree is a bare minimum to go for the job, and there's thousands of them going for these jobs, and 2 or 3 of them are going to get them. It's a very highly skilled thing. So someone teaching you that from an ex-banking background is great, but you're teaching the masses without economics degrees how to do this, and it is absolute overload. There's permits, look. There's permits authorized from 1960 to present. If you put this chart next to a daily chart of the US dollar, the DXY, you will find a huge correlation. It's not there as by chance that happened. It leads it. It's a leading indicator. So, but it's way too complex, honestly, in my opinion. But do it. Do the course. It's going to cost you $2,500. And then you're going to need to buy the data. You can't get it off Forex Factory. Everything you need is not available on Forex Factory. You've got to go and buy the data. Funnily enough, Anton supplies a feed for you for 150 quid a month or something that you can have. Anyway. Out of the DAX for now, very low volume. Yeah, I'm out. I'm partial. Holding FTSE. So up on the day. So all the loss from today is recovered. All the loss from those trades from earlier is recovered. I'm actually going to put a stop loss on the DAX behind that propulsion gap because there's a good chance I think we're going to double top at this high potentially. This is pre-market high of the day. We've got a gap fill downside to fill as well. So I'm not convinced about a long. There's very little volume today. We're slipping. I think this is more slippage. Look, Look at the size of the gaps here. Yeah, this is more slippage than trading. This is why we're doing this. We're trying to fill orders. I don't think this is actually bullish price action. This is just the market trying to get some orders done, not good trading conditions. Thanks for the answer. I have all your EAs running V1 for specific kind of ORB. Yeah, you're just going to have to play with it, Mumo, unfortunately. One of the reasons I abandoned version 1 and upgraded to version 2 was because of the complexity of this 2-digit thing. So I built the thing to work around ADR raw data, which it doesn't matter what your broker says. It works on raw data provided by your broker. So it averages the distance of your broker's data. So it doesn't matter. It doesn't work in pips. Working in pips is awful because you have to adjust it for each broker because different brokers have got different decimals. Different decimals equals different pip amounts. It becomes super complex, which is why everything I do now works in ADR. Same for everybody. It's raw data. Very easy to set up. An auto-populating Excel spreadsheet just to drag the essential macro data into it and score it. Yeah, you could do. Good luck. Go do it, Twig. You think it's simple. How are you going to score it? Scoring it is the hardest bit. Yeah. Every bank and institution has a different scorecarding system. So you'll find there isn't a right or wrong way to scorecard. This is the thing. And this is partly why I kind of like what the guys are doing with this website that's being built. They are allowing you as a user to get the raw data and create your own scorecarding system around the data. So they will obviously give you this is a scorecard. This is how it's scored. But do you want to change the scoring? So if you fancy CPI giving a score of 3 instead of 1 or 2, you can adjust it. So you can create your own temperature within each fundamental news event. You can also select which news events you want to include, because obviously there's a massive difference in what you get for different currencies. So this is the news events for the Canadian dollar. There are 11 of them. For the Australian dollar, we only have 8. For the Swiss franc, we only have 3. For the euro, we have 13. For the US dollar, we have 37 news events, right? So you can't take every single news event from the dollar and use the impact of that and then compare that to the Swiss franc, which has 3. Because you can't, it's just not, they don't match, do they? So you have to have a way of creating your own scorecarding system. They are all going to have the core interest rate, inflation, and GDP and unemployment. But New Zealand dollar unemployment is not a regularly released impact news. GDP, for example, and CPI for the New Zealand dollar is released quarterly. Everybody else releases it monthly. Yeah. So how can you compare New Zealand dollar CPI to pound CPI? Because the pound CPI comes out every month. New Zealand dollar comes out every quarter. Unemployment data comes out monthly for the pound, comes out weekly for the dollar. So how do you compare them? Yeah, this is the complexity in it. It's not cut and dry. You can't just dump the lot in a spreadsheet, press a couple of buttons and go, there you go, there's my analysis. It's incredibly complex stuff. So hence this website is going to be, I think, something that most traders are going to be able to go, that's pretty damn impressive and good. And it's got lots of AI stuff in the background as well. But yeah, anyway. I've run a scorecard for 5 years. Yeah, exactly. So tweak it on your own preference. Yeah, make your own up. No one can tell you how to score stuff because no one's right and no one's wrong. If I tell you that you should score CPI with a 3 and your maximum score in your scorecard should be 15, you'll tell me that you score CPI with a 4 and you use a 25 scale scorecard. Who's right? Who's wrong? No one. That's your opinion. That's my opinion. The market will have its own. It doesn't matter, does it? How you scorecard stuff if a Barclays are scorecarding it one way and HSBC are scorecarding it the different way, which is right, Barclays or HSBC, don't care. They both make billions a month. Irrelevant. It's an opinion. The market is driven on sentiment. Sentiment is opinion. People are sheep. They follow sentiment. Which one's right? Don't know. Flip a coin because it's a 50-50 chance. That's it. That's trading, isn't it? 50-50. Always will be. Thanks for joining, Thomas. Good name. Thomas Gospel. I can't say that. Tubo Tamuno. I struggle with names. But this weighting and temperature you just mentioned will also be applied to your own dumbed down version. Yep. Building permits do not move the markets. They do. That is what I'm saying. During financial crisis, building permits moved the markets. Now I cannot see them moving the markets at all. Not directly. No, they don't. This is why it's a yellow indicator. But it's a yellow indicator which, think of an engine, right? You got an engine, yeah, with a load of pistons in it, yeah. And basically what it's doing, this is a V8. 1, 2, 3, 4, 5, 6, 7, 8. V8. I said, let's have an Audi. Let's go for V10 or a Lambo. So you got an engine with a load of moving parts in it. In there, there's thousands and thousands and thousands of cogs driving stuff around. Every single one of these cogs makes the engine move. Without one of them, it will fail. But at certain points in certain gears, certain cogs are more important. How they are weighted is part of the kind of tuning process and the weighting process that you have in a scorecarding system. So where M2 money supply a lot of the time may not be important, when there is high national debt, M2 money supply can make or break a currency. So it becomes more important. Building permits are always important, but they rely, when building permits are released, the figures on building permits are released, they rely on other cogs in the engine, CPI, PMI, and other things, interest, unemployment rates and unemployment claims. They rely on these being in certain positions for them to have an impact. But they will give you an idea as to what that is going to do next, which gives you an idea as to what that is going to do next. So this is why they call them leading indicators, which you probably already know. Yeah, because they lead other indicators into a directional bias, which in turn lead other indicators. The one you always end up with is interest rates. Interest rates are the most important thing on the planet. Whenever you get an interest rate change, it always moves the market 100% of the time. Yeah. Not necessarily on the news event, but before the news event. So, for example, the Swiss franc. Swiss franc came out and said they were going to drop the interest rates. Yeah. You can't really tell at the moment because of Trump. This is the trouble. Everything's screwed, isn't it? Because of Trump. But what the market will do is somewhere in the region of 4 to 6 weeks, or 2 to 6 weeks, really, depending on what they want to do and when they want to do it, is they will sell the Swiss franc off, ready for that interest rate decision, which is going to come out at 0. When it comes out at 0, the market goes, oh yeah, we knew that. We've done that. Your leading indicators will tell you the likelihood of interest rates dropping by monitoring what comes before them. So CPI, PMI, Purchasing Managers Index feeds into the Consumer Price Index that feeds into inflation. Inflation going up feeds into unemployment rate drops, feeds into da-da-da-da-da-da-da. So that it's all massively interlinked, which is why the scorecarding systems have to have weight for each individual thing. And the weighting needs to be adjusted dependent on the standard deviations that are being achieved. So if something, building permits are flat and they're coming out exactly what they were forecast all the time, it means economic growth is slow, which means that your inflation figure is going to change, which means that, you know, and it's this whole massive knock-on effect that you have everywhere, which is why it's such a complex thing. At the end of the day, as a trader, your decision-making process is, should I buy or sell it? I don't think personally having all of that fundamental data at your fingertips is healthy in the fact that it will make you press one button more than the other, because it's your opinion on how much that individual news effect should control price and other indicators in the future. It's an opinion. And I think you're better off listening to the bank's opinions, because the banks pay people millions to sit in offices and do this. Doing a $2,500 course and trying to figure it out yourself, I don't think is the best way to do it. The COT report tells you all of this information. If the banks are long, go long. That's it. And also sentiment, retail sentiment is the other thing. If retail sentiment matches up with the opposite to the COT report, which matches up with the opposite to the fundamentals that you've done in your scorecard, you know exactly which way to go, because retail is wrong 80 to 90% of the time. So if they're going the same direction as the banks, you know exactly what to do, don't you? But timing is irrelevant. And the thing that you cannot get right in markets is timing. You do not know when this is going to drop. I know it's coming to here, but I don't know when. If I know that the euro is dropping interest rates in 2 months and the Swiss franc is going to increase its interest rates in a month's time, I know the bias is short. When do I press the button? Where do I place my stop loss? I know where to place my target, but I don't know when to press the button. I don't know when to do that. Fundamentals and scorecarding systems do not help you with timing. And timing is the one thing that everybody's trying to get right, because without timing, you've got it wrong. Yeah. If you want to go short right now because you know it's coming here, do you go short now and place a stop there? Or do you place your stop there? Or do you place your stop there? Or do you place your stop there? And should you short it now, or should you short it later, or should you have shorted it yesterday? All of those are right and all of those are wrong, because we can't see the future. The past doesn't help us see the future either. It's a 50-50 shot, always. Yeah. And, you know, it's simplifying things, in my opinion, is the best thing to do, which is what this website kind of is doing. It's going, look, these are fundamentals. This is how they affect the market. This, in theory, if the market does what it should do and everybody's got the same sentiment, means that you should be doing more of this than the other. So when it comes out with a very bearish signal, probably better off shorting it, because short term it's probably going to happen, but it may not happen for a while. So it's just another tool for the toolbox. But it's not, I don't think there's anyone on the planet that can tell you anything about where this is going. And I know that because I can't do it. I've been doing it for 20 years and I still haven't got a clue. Where's the DAX going today? I have no idea. I've got out because I've made money. That's it. Should I get out of the FTSE now with that much profit? I don't know. Can you tell me if it's going to go higher today or come back down to my entry point? Or worst case scenario, come back down and stop me out? What do you do? I don't know. Are you happy with $237 this morning? Yes. Then shut it. If you're not, hold it. But no one on the planet right now, and this is what gets my goat about forums and chat groups and stuff, is like you get these people coming out, this is a short, 100% guaranteed short. Look at that bearish engulfing, and look at that. It's an inside bar forming now. If that comes out in red, it's 100% short, guaranteed stop above the high. It goes down, he goes, see, told you so. No, you didn't. You took a 50-50 gamble and it paid out. Well done. Next time you go into a casino, I'll stand next to you. Doesn't make you a profitable trader, does it? It makes you lucky. That's all you got. I don't think fundamentals helps in that respect. You know, and like Marco, like you just said, you've got a different opinion on building permits to me. My opinion on building permits has come from Anton Creel. He may be wrong. You may be right. It's an opinion. I have no idea. I got taught that money, M2 money supply and building permits are the hidden secret source. But like you've just pointed out, sometime building permits will go through the roof and the market won't bat an eyelid. But what you won't see is 3 to 4 days later, the market take off because the M2 money supply said we need to go long, but let's just wait for this news event. That's confirmed as bullish. Right. We know that unemployment rate's going to drop. Brilliant. What should we do? Definitely buy the dollar. But it was the building permits that the analyst looked at, which said, this is your condition. The trigger for entry will be that news event. But it's not that one. It's the leading one telling the next one to do something. And this is where it gets super, super complicated, which is why I just dumped the lot. But this is what the banks look at. Thanks for subscribing, Raj. Welcome aboard. I've run a scorecard for you. I have to answer that one. I use macro, not news. Yeah, macros. Macroeconomics. Again, that's another thing. You know, there's so much of this, so much information overload. I started weighting retail sentiment highly, but found I couldn't get an accurate feed on it. Funny you should say that. I'm giving away all the secrets of this website. I am gonna get really told off. I have to hide this one up here. This is another part of the website. 9 o'clock this morning. So Cad Swift's strong sell. Let's have a look. I got down to the New Zealand dollar, didn't I? It's bearish. 9 o'clock today. US. So it's basically saying to sell all the Swiss franc pairs, basically. Medium buy. Go strong only. Should be buying the pound New Zealand, buying the euro pound. Pound New Zealand. Now, this is where this goes wrong. See, sentiment is trumped by fundamentals. The fundamental we've just had this morning is the retail sales for the pound, which is a negative. So you ignore sentiment and you follow fundamental this morning. You've got to know all of this. This is why it's so bloody complicated. Trading. Isn't it fun? Let me get rid of those and just move that back to there. Get my calendar back to what I actually want on it. But anyway, that's coming soon. I will be talking about that more when it's finished, but it's not finished. So. And then I guess there'll be loads of training on it, which they'll do. Thanks, Lee, for a great answer. Can I just ask one more question? When you sometimes have the moving averages on and sometimes not, are you using them all the time or only for a specific strategy? No, so I don't use them at all anymore. In the bootcamp, they're taught on the 4-hour chart and the daily chart. And these are what I call the institutional moving averages. So it's the daily 72 and the daily 24. So there's 24 trading days in a month. There's 72 trading days in a quarter. Markets move on monthly and quarterly cycles, reporting and sales. So basically, these two moving averages are really on the daily chart are the only two that you need to tell you what market bias is. This is the quarterly moving average, the 72 daily. This is the 24 moving average, which is the monthly moving average. So if there is a continual bias on something, they will move the market for a month to a quarter to make the money. So institutions and funds get paid monthly and on monthly and quarterly performance reports. You will find that they will move the market into favorable positions and trends in months and quarters. This is why we have quarterly cycles, which is why you have futures cycles, options cycles, all these cycles basically. So these two moving averages measure institutional directional bias. These will fall in line with COT. So they are only useful if you are a long-term swing trader. By long-term, I mean you are trading daily charts, possibly 4-hour charts at a push, but more daily charts. And you're looking for daily swings. You will find it will pull back into the 24. This is what we call the shadow. This area here between the two moving averages, it will pull back into the shadow. And that is what you will find in a trend will be the pullback zone. Occasionally it will invalidate that zone, which is why it's useless. Yeah. Moving averages are historical. Yeah. This line is telling you what the average price has been for the last 24 days. I can tell you what it's been because it's going up. So I can tell you this is going up. I can see the price is going up, therefore the moving average is going up. You don't need the moving average. I could look at a chart without a moving average on it, like this one here, and I can tell you that the moving average is going down. Why? Because the price is going down. And then it was flattening out here because price came back up again, which means the moving average will start to flatten. Don't need moving average. Price leads everything. Moving averages are lagging indicators. They lag price. In this case, it lags price by 24 candles. In this case, it lags price by 72 candles. In this case, it lags price by 200 candles. What the bloody hell is that useful for? I don't want to know what was happening at the beginning of the year or the end of last year. I don't care what the price was at the end of the last year. We've had Trump, we've had wars kick off since then. It's got absolutely nothing to do with directional bias whatsoever. Yeah. Oh, it's above the moving average. I'm only going to buy. You missed that, you missed that, and you missed that. Unlucky. So I don't use them anymore, but I have got a strategy for the market reverse alerts indicator and a strategy that's taught in the bootcamp, which is a trend following strategy, which is absolutely fine for trending instruments. But the market only spends 20 to 30% of its time trending. Yeah. Moving averages for 1, 2, 3, 4, 5, 6, 7 months, 8, useless, 9, can't really tell because it's pulling back on that, 10. So for the entire 10 months we got on here, are these moving averages any use whatsoever? No. No rubbish. Just don't help you. When you're trending, they do, but you are relying on the market going into a trend. So yes, you should have sold in the pullback to the shadow, but look at it. Yeah, you sell it here and it goes down, then it comes up, then 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 it goes down, and then it comes up. Look at where you sold it and look at where you are 2 months later. 2 months. Distance moved, 143 pips. ADR, 85. 1.5 ADR in 2 months. Trend trading. Utter waste of time. Unless you are an institutional trader, long term. Yeah, then it's brilliant. But short term, not going to help, is it? But that is for the trend pullback strategy, which is on the website. There's nothing wrong with it. You know, the strategy is absolutely fine. So, you know, there's nothing wrong with the strategy. It's just you need to be a trend trader to be trading it. And I'm not a trend trader because I prefer to trade mean reversion. But you know, this strategy works absolutely fine when the market's trending. In the same way as when the market is trending, my mean reversion strategy struggles. Breakout strategies won't work. Trend strategies will. But the market regime and the market condition is out of your control. So you pick a strategy and you trade it. If the market matches the strategy you're trading at the time, you will make money. If it doesn't, you won't. You have to sit through drawdown, which is what we do most of the time, which is why we make money, because we don't force a strategy onto the market. We trade the market and the market moves. Trading is about extracting money from market movement. It's not about guessing market direction. You can't do it. It's impossible. Yeah. Bring John Wick out because we haven't seen him for a while in the morning streams. But, you know, that is what the market does. That's all the market does. Yeah. Your job is not to predict the future with a time machine. Your job is to take a position in the market, wait for the market to move. When the market moves, adjust your position to take advantage of the movement and extract money from the market when the movement occurs, which is why at the moment I'm struggling because we're not moving. You cannot make money without market movement. And then you have to drop down to low time frames. Trouble with low time frames is if you go down to a low time frame and then it's when the market decides to move, you get into trouble. So it's finding the balance, isn't it? Aussie New Zealand's triggered my long. So in long Aussie New Zealand out of the propulsion gap bounce. So entry 2 will be down there. Entry 3 will be monthly low. Average will be there if we come and stay in this range. So this is either a false breakout, price discovery failure, which will do that, or it is a breakout retest. But this is my point. It is one of those things, guaranteed with 100% certainty. This will now do either that or that. I do not know which of those it's going to do. I have no control over which of those it's going to do, but I have a plan in place for my failure and for my success. That's it. I don't know where it's going. If you are a trend trader right now, I don't know what you're doing. You're shorting, only shorting. Yeah. So if you're a trend trader right now on the Aussie New Zealand, you're short. Yeah. I longed it there. 1. I shorted it there. 1. Yeah. Because I didn't have a bias, I won that and I won that. Now I'm longing it again. So I'm expecting this market structure, high, low, high to go in. If I'm wrong, it will come down and probably stay in a range for a bit, in which case I'll just get out down here somewhere. If it decides it's going to come down and test the monthly low, that's fine. I'm in here. I'll get in there. I'll get in there. And then I'll get in there. And then I'll get in there. And by the time it comes there, it'll bounce because that's what it did last time. And I'll get out at some point there. I don't know where it's going. The fundamentals don't tell me where it's going. The moving averages don't tell me where it's going. The indicators don't tell me where it's going. I just get in the market. That's it. If I knew which way it's going, I'd go that way. I hope it goes up. But that's all I've got, isn't it? That's all everybody's got is hope. Retail, I got flipped all over the place as my scorecard updates hourly. Yeah. Retail sentiment is very useful for a directional bias, a la the one we just looked at, which said to at the moment there's a buy on the pound New Zealand because the entire market is short the pound New Zealand. We just had negative news, so that is wrong thing to do. So that system is saying long the pound New Zealand, but that system's data and the traders that it's monitoring are probably not paying attention to this. How many times do you see in the Discord channel people go, what just happened? Why did that move? And you just have to say, what do you mean, why did it move? Why did the pound just drop? Obviously, drop because the retail numbers. What's the retail numbers? Why are you trading? So you've got to know this stuff. It's important because it allows you to make decisions. I am not going to take an opportunity long on the pound today. If that had come out green and I saw an opportunity to long the pound today, I'd leap on it. But I'm not going to because of the fundamentals. And it's the most important thing you need to know, because if you're fighting the fundamentals, you are just going to be fighting constantly. You are trying to catch the falling knife continuously. If there has been, last week was a great example for the US dollar. Yeah. If you are long biased the US dollar, let's see if we can find a dollar pair. We're not going to find one because they're all negative. You'd have to go down to a lower time frame to find something that would give you a bias long on the dollar. But if you are long the dollar at the moment, your bias is you want to buy the dollar because you think it's going to bounce. And you are not paying attention to the fundamentals. Last week should have told you with no uncertain terms that it's not going well for the dollar. If you are trying to buy every dip in the dollar at the moment, trying to get a bounce, you are going to catch that falling knife and it's going to go straight through your hand forever, because the CPI went down. The GDP for the pound went down. The PPI went down. The unemployment claims were up. Michigan was good. So they asked 500 people whether they thought it was a good time to be in the dollar. And they went, yeah, we think it's really good at the moment, because they know nothing about anything. And then we have more news coming out, which is negative for the dollar. Then the interest rates don't change, which is neutral for the dollar. Then we've got a bank holiday, and that's it pretty much. But out of all the news there, we've got pretty much 80% of it saying bad news for the dollar. Do you think the dollar economically is going to do well or badly? If it does badly, do you think the dollar is going to go up or down? So if you have a long signal on the dollar, should you be taking it? No. And that's what the scorecarding is useful for. If that system there that says the last X number of news events have been negative, giving a score of -2 on the dollar, you know that when you see the perfect setup to buy an RSI extension on the dollar, you need to be cautious about it. Either pick a smaller target or have a tighter stop or use a smaller risk, because you are fighting the market. If the market is saying long and the dollar drops dramatically and there's no news event that caused it, you know this is a pullback, i.e. it's a profit take by the banking institutions on their first leg to gain money for their second leg. So you buy that RSI because you have a bias. And that is the same as a moving average. And this is what I say, all fundamentals and move and all this stuff is just giving you a bias, which has a use. But you've got to be careful because it is a long-term bias. Remember, banks and institutions look at quarterly and monthly cycles. Yeah. If you are thinking they're short, that doesn't mean they can't buy it for an entire month, even though their bias is short. The COT report for the dollar could be saying we are, I don't know, negative 42% on the COT, telling you that the bias is short for the dollar, but they are short for 3 months, meaning they are getting out here, they got in here. If you here are shorting it because it says the bias is short, you are going to go short with them, but you're not going to go short with them today, this week, or for the next 3 weeks because they're just going to pull back on the next leg down. That will be right eventually, but you can't use it for directional bias on a daily or intraday basis because it's a long-term bird's eye view. And that's what fundamentals are. But short-term shift in market sentiment is created. If that came out at 4.25, you can kiss the dollar goodbye. If it came out at a 4.75, the dollar would be up 400 ADR today because the market's not expecting it. And that's when you get the fundamental shifts happen. And all of a sudden that COT report over the next 2 weeks will shift in the opposite direction. This is all stuff that is layman's are not going to know all of this. And even me, there's so much information about all of this stuff that you're never going to get on top of. And I don't care because I trade intraday. I trade intraday and intra-week. Occasionally I'll be holding for a month. Doesn't really help me, does it? But I think that will help, that website, because it's going to give everybody, it's kind of, I guess, a lesson in itself. Everything will be explained and it will be, this is why this should have this impact. But they'll be able to back it up as well with data, which is the key thing. So every single one of those news events, when you get a super strong sell signal, which is bigger than a standard deviation from the normal news result, like we had this morning for the pound, they will look back historically over the last year or 2 years and look for instances where that situation happened and show you what happened on the chart. And if you can see every time a standard deviation of 2.2 came out on the dollar over the last 5 years, it dropped for 3 days solid, do you think you should buy the dollar, the pound, or whatever it is? No. That's where that is key, that information. But it's not going to give you many opportunities. It's going to give you opportunities when this thing happens. So you're going to have to be patient. You're going to have to sit on your hands. If there's no news like today, yeah, you got to sit on your hands. There's no opportunity. If the market takes off and does 150 ADR today, it's not because of news. It's because it just needed to go somewhere. It needed, the imbalance was there for buys or sells. That's all you got. Morning, Rajiv. Looks like milk market from Baby Pips. Market milk. Milk market. Market milk. I haven't looked at Baby Pips since I was a baby. All right, whatever. Go away. Yes, that's a currency strength meter. Yeah, so this is just currency strength. This is different, but it's, yeah, I mean, but this is kind of currency strength is a little bit like sentiment in the fact that it's useful. I mean, they've got a currency strength area as well. Try not to give too much away. I'm struggling. But that, that's the sort of information you can find on the site. Yeah. Currency strength. So, it's all, I think that the idea of this website, what they are trying to do, which is why I kind of got involved with it, because I think it's a great idea, is bring everything together in one place, which you have sites out there at the moment like that. Investing.com, II.com, or whatever it is, .co.uk, Interactive Investor, investing.com, or forex.com. There's loads of sites out there that have lots of this type of information, but it isn't presented in a way that the typical trader can understand, find, or more importantly, use. And what they are trying to do is put all of this into one place, which gives you kind of a dashboard and says, right, today, everybody's selling the pound US dollar. Normally, when everybody's selling the pound US dollar, the market goes in the opposite direction. Currently, the fundamentals say that the pound should be weak. So therefore, it's unlikely there'll be much movement because they are going to drive it that way, and this should be driving it the other way, which means they cancel each other out. However, there is an opportunity in the US dollar because we've had 3 negative news events in a row. One of those has been a very strong sell signal, and the sentiment is buying at the moment. Therefore, if the market pulls back today, fundamentals are saying medium to short term to sell it. The sentiment is saying medium to short term to sell it. So look for opportunities where the market rises to sell the dollar. Yeah, that's what traders need. Is I don't get any of this. I understand it's important, but what do I do? So there's a dashboard that goes, sell the pound US if it pops. And this is why. If you want to know why, this is why. But if you don't want to know why, just look for a pop. If RSI gets extended on the 15-minute chart today, sell it. Yeah, that's a signal. Yeah, so it's giving you kind of just that bird's eye view, if you like, of or idiot's guide to what drives the markets up and down. Everybody thinks they know what to do, don't they? Because they've seen a guru do something a couple of times. Every time you just look at Lee's chart. Look, literally every time it comes down and it comes back up into the shadow, you could sell that and make an absolute fortune. I can show you 100 times where if you sold that, you'd make an absolute loss every time. But I can show you all the ones that work, and then I can show you that one that worked, and then I can show you that one that failed. So what you should have done there is bought the reversal alert, because that was a W pattern reversal. But it wasn't, because it was actually a second leg short. It's everything, because it can only do one thing, up or down. It's always long or short, depending on what the next batch of orders from the banks and institutions comes in at. None of that in data gives you any of that. It doesn't help, does it? ORB version 3.1 is the newest? Yes, it is. I think A1 Trading do something similar. Edgefinder, yeah. Yeah. But it's pretty basic. Yeah, I mean, that's what you need, pretty basic. If it's too complex, it's not going to work, is it? The best systems on the planet are ones with 1 or 2 things in them. Yeah. The more complexity you add, the more moving parts you add, the more things are going to break, the more things are going to go wrong. And this is the problem with scorecarding. If you don't get the weighting right on each individual news event, you're stuffed. It's just useless. This is why I love what I do, right? When this indicator gets above this level, you sell it. Yeah, get below the level there and there, you buy it. Yeah, so you bought that, and you sold that. Where is the complexity? There is nothing. There is one indicator, one line, and the squiggly line goes below it, you buy it. Then you wait. Yeah. What I could do is say, when the RSI gets below the 20 level, examine the CCI and ensure the CCI is below 50, and ensure that the MACD has a cross signal above, but with a V shape, not a U shape, and it needs to have broken the previous high for the signal to be valid. The stop loss may not be more than 25% of the average daily range of the last 6.5 days. And then your target should be 2R above wherever you place your stop. Or you could just buy it when it goes below that line. Both of those strategies are valid. I made the second one up. I've no idea what it was. I couldn't repeat it, but it works 50% of the time. Because when you press the button, it'll either go that way or that way. That's it. This is simple. Advanced scorecarding using 33 financial news events with standard deviations which vary over different time periods and trying to apply a weighting to them to give an overall score for whether you should buy or sell something is more complex than an RSI. The odds are the same. It's 50-50. It will work or it won't. So it's about giving the information, I think, this website, for people to use and figure out what works for them. If you find, and there's plenty of people, when I had my retail sentiment thing, which I was scraping data from all over the place, all over brokers and all sorts of places to get that together. When I had that working, people, when I turned it off because I didn't use it, they were like, when are you going to put it back up? And I didn't realize how many people were relying on this thing. And I was like, what do you mean you use it every day? I use it every day. It's brilliant. They found it useful. Whether they were making money or not, I don't know. But this is the thing. It's all about giving the information and making it simple for people to absorb and find useful. Strategies that have got 6 indicators on a chart require 3 signals and complex algorithms to get in and out, depending on this, that, and the other, are never going to work. Fundamental scorecarding for you and me is probably never going to work. It's too complicated. It's too many moving bits. So what A1 do is they have a simple scorecard system, which is what I built previously, Fundamental Trades. You know, my old website, Fundamental Trades, is still up. The data's not live anymore. So it's old data, it's useless. But, you know, my directional buyer scorecard was very similar to what they did, or what they do, I guess, in the fact that it gives you a score. And this new website will, and this is why they've asked me to get involved, because I've built all this already. I understand it. So they've asked me to get involved in this section of the site. But I'll be building something similar to this for them, which is interest rates, interest change, inflation, GDP. So these are the belts and braces. Yeah. If the interest rate is higher on the US dollar than it is on the Swiss franc, you're going to put money more in the dollar than you are in the Swiss. If the differential change is more than expected, you definitely want to buy it. So you allocate numbers to it. That's all you do. You know, and if COT report comes out and says that the pound, the entire market is long the pound and they're short the New Zealand dollar, that's important information, because the banks and institutions' 1 to 3 month view is that you're going to be buying the pound New Zealand. Where do you think it's going? Up. Of course it is, because they're moving it. Yeah. And if the retail guys out there are all selling the pound New Zealand, you know you want to buy it, because they are always wrong, because they're always trying to fight the market. So you put all this together and you come up with a score. And every morning you wake up and go, pound New Zealand, has it dipped? Yes, buy it. That's it. Has it popped? Yes, missed it. You always buy the dips. You always buy the pullbacks. You always buy the double bottoms. You always buy the reversal alerts, the W pattern longs, if that is a positive number. This is all it does. Nothing more. It gives you a sentiment, a direction, a bias, and moving average, if you like, a thermostat of what's more likely to happen than not. It still doesn't mean that the pound New Zealand will not come down for 2 days solid, and you will lose if you just keep buying. That is the part that you can't control traders. Traders are going to be stupid and do that. They're going to go, nope, that's a 6, I'm buying it. Nope, it's coming down. The retail sales have just come out negative on it. It's a 6, I'm buying it. But it's just come out as the biggest deviation on retail numbers for a year. Nope, I'm buying it. Well, then you're an idiot. I can't help you with that, but I can show you information. That's all the sites do, isn't it? A1 Trading, investing.com, Interactive Investor, this new website that's coming out, My Old Fundamental Trades. All it does is it's information. How you interpret that, how you wrap this around the market, that's up to you. And that's where the training comes in. Yeah. So, I mean, these guys at this site, they're going to be giving training on what all of this means, but it's not going to go, this is what is going to happen, because they don't know. Trump comes out and says something and it's going to go completely the opposite direction to that, because that has got nothing to do with Trump. Trump will move the market more than anything at the minute, won't he? So this all goes down the pan. COVID. When I built this, COVID happened. Do you think the market paid any attention to this in COVID? Didn't give a crap. This is why I partly stopped using it. The COT report became useless. Bank and institutional positioning was utterly useless because they didn't have a clue. They were running around like headless chickens. Where should we do? Buy, sell, buy, sell? I don't know. Should we sell our stocks? I don't know. Which stocks are going up? Which stocks are going down? Which companies are bankrupt? Which are selling? Peloton, buy tech stocks. That's what was happening. It was utter chaos. This means nothing. Indicators mean nothing. It's got a 50-50 shot of moving. That's it. That's all you get, isn't it? Anyway, I haven't finished my analysis. Let's just quickly look at what's going on here. Okay, so back to break even. So that was the right call on the DAX. FTSE did come off the double top. So we'll see if we can get higher low on this. I'm going to move that down. Just take a partial if we get back up into propulsion, just in case we're going to put a symmetrical triangle in. But I think I'm going to stop out and flip short by the looks of things. As mentioned, could put it on Excel spreadsheet. Yeah, you could do. But this is the thing, Twig Trades, right? You can. Let's do a poll. How many people have the time and skill to scrape data from the web, create a spreadsheet, learn how to get the spreadsheet data population done, learn how to automate that, get it up, learn how to scorecard it, and then read it? Or would you rather pay 20 quid a month and have this all done for you? That's their edge. Yeah. These guys, they're going, right, we're just going to give this all away for 20 quid. 20 quid a month. £1 a day, £1 a trading day for all of that information. Bargain. Half of it's run by AI. Yeah. There's no human beings there. Half of this is done by AI. This is the new norm, isn't it? Just pushing back up on the FTSE. Anyway, let me get the analysis finished. God, this has been a waffly one today. What's the time? 10 o'clock. 2 hours of waffle today. We haven't done anything analysis-wise. New Zealand dollar CAD. I think I covered that. We're bang in the middle of nowhere. New Zealand dollar Swiss. Looking pretty similar. We have tried to break out, but we failed. So it's a failed price discovery. We double bottomed on that propulsion there. So yeah, I prefer, it looks a lot more bearish, doesn't it? But the Swiss franc dropped interest rates yesterday, biased that way. So not really keen on it either way at the moment. That was your entry here. Missed it really. New Zealand dollar yen, all the yen pairs are the same. I'd rather do that when we've got wars on. New Zealand dollar, US dollar. We've had a reversal alert on that one on temporary, I think, US dollar strength, but propulsion gap is holding. So we're kind of approaching the bottom of this old area of balance, which we broke out of, and then we rebought this propulsion move, this news event. Rebought it, put in a new high, rebought it. Yeah, so this is the first retest of this section here, potentially coming on. I'd like to buy that. So I think probably market structure shift to the downside is happening. So we'll hold this propulsion gap. We'll come down to here, and then we'll probably bounce back up into there. Possibly. It's either going to, yeah, I mean, there's no real reason for them to buy here. There's no real reason for strength in the dollar, though, either. So, again, tricky one. But, Signal triggered long on it yesterday. If you took it, you're in money. US dollar CAD, shorts at the moment, obviously, with what's going on. We have had a lovely bounce, though. So I think a lot of guys were long on this from back here. You wouldn't have been long from there because you'd have been out. But I think a lot of people were long on it from here, somewhere around here. That was your exit. So you had your first entry somewhere around there, your second somewhere around there, your third, maybe fourth, somewhere around there, your average around there, and that was your exit on yesterday. I think a lot of people got out. Some people contacted me, said they got out on it on Thursday. US dollar Swiss, so what to do with it now? Don't know. For me, I like that bounce a lot as a short. So oil price is the tricky thing here because oil price affects both of these guys. US dollar Swiss, that's bearish at the minute, but with that Swiss franc now weakening, this could go either way from here. I would just wait for some kind of signal on it at the minute. Your last longs were here. But yeah, it's not really doing anything at the moment. So the Swiss franc is weak on interest rate drop to zero. The US dollar are not dropping interest rates, at least until till September. So from a fundamental perspective, they're bullish. But and the Swiss franc is bearish. So obviously the logical. Yeah, this is the move, like I said, they put the move in before the event. Swiss franc interest rates yesterday, moved before. So yeah, I would say any kind of pullback on this would be a good buy as long as we're not invalidating that low. If we got down to 150, that propulsion gap, that'd be a lovely little buy down there. And US dollar yen, no idea. This thing's just stuck. Don't know what to do with this at all. Just you want to be doing that, but equally, I can't afford it. Costs $30 to hold it short. If this thing wants to drive up here for 3 weeks, I'm just going to be hemorrhaging money in swap fees. So I'm not interested in it any way, shape, or form at the moment. But obviously, you know, you've got to look at that M pattern reversal and think, yeah, that looks good. If that retest there is right, we should be able to get down to ADR at least today. Or over the next 24 hours. Today, Monday. Pulling back. Fair point. For me, developing it was key to understanding. Easier to buy it. Yeah. Yeah, that's the thing. If you understand it, you know, and this is the thing, is with trading, it's all about learning and understanding stuff, everything. There's so much information out there. It's overload. You can't watch. There's more videos and more hours of videos on trading released every day than you could get 100 people in a room to watch. They would be dead before they'd watched all the content. It's being released too fast. And a lot of it is utter crap. But a lot of it is also contradictory. You watch one video and it tells you to do one thing. You watch another video and it tells you to do the opposite. I watched one video the other day where a guy was trading smart money concepts. And he gave a strategy where when you got back into a fair value gap, you waited for the confirmation and you sold that. And then later on in the video, he gave the opposite strategy where you waited for it to break the fair value gap and then you bought it. And then there was a deviation on it where it filled the fair value gap and failed the long and broke down for a sell. So in one video, he gave you the 3 possible outcomes of trading a fair value gap. You either sell it, you buy it, or you get stopped out and then you do the other thing. How is that any use to anybody? He just basically said, when it gets to a blue square, in my case, that's the color I like for my propulsion gaps. But when you get to a blue square, either buy it, sell it, or wait to get stopped out and have another go. How is that useful? He just basically said, when it gets there, I ain't got a clue. It could go up or down. Why didn't you just say that and save the 30 minutes I just spent watching this crap? This is what somebody sent me and said, could you automate this? Yes, I can, but why? I can also flip a coin. I can automate a coin flip. It's called RND, random number. I could do that and build an EA that does a random number generation for you. Got as much hope of working as that has. Quadruple witching hour. Is it today? Oh my God, is it really? This is another thing. That's a good point. That's something they should have on that website. A calendar of quadruple witchings. June the 21st, 2024. June the 20th, today. Okay, so be prepared this afternoon for some serious moves in the market. Yeah, so today is the day where you've got options, quadruple. Go and read this website. I'm not going to explain it all in detail, but basically tons of options expiries. Remember I was saying earlier about this, yeah? Banks and institutions moving monthly and quarterly cycles. Quadruple witching is options expiries, quarterly options and monthly options expiries, all happening at once. So you have virtually every order in the market, if you like, going we've got to expire the order and get out today. So there is huge volume suddenly hits the market on a quadruple witching. You also get a triple witching. A triple witching is not quite as powerful as a quadruple witching. There'll be something in there about triple witchings. Google them. Ask AI, whatever you want to do. But basically the upshot of it is volume. Yeah, we get a lot of movement. There you go. A date on which the contracts for index futures, stock futures, index options, and stock options expire simultaneously. So when you're trading the options markets and the futures markets, you have an expiry date. You have to be out of your positions by the expiry date, or the contract has to be fulfilled. So, for example, if you bought oil futures, you are buying a barrel of oil at a price in the future that you have locked in. When that futures contract expires, the date comes up. If you have not exited that position, they will deliver you a barrel of oil. No word of a lie. Look it up. It's happened. You will get an oil barrel delivered to your door. So you are literally buying a contract of oil. And it's the same for all of these. So this is the day where they all go jump ship, if you haven't. But 90% will have jumped ship by now. But what you find is at the market open, it's kind of get out. So you get a huge move. So today is one of those days where I don't do this, but the thing that is probably the best thing to do is trade the pre-market. So when you look at the stock indices, let's probably look at those here. So trade the pre-market. So there's your 5-minute opening range candle. Yeah. Pick a range before the open, right? And straddle that, because likelihood is you're going to get a huge candle at the open, which means that you won't be able to trade it because that's where all the volume goes. And then it will just go, or it takes off and it's gone. Go and look at previous quadruple witching and triple witchings. There's some dates there. Look, go and look them up. Look at the days. Look at what happens to the market. It is a hit and miss thing. All of these things are hit and miss because it is dependent on who's got out when. And it also depends on what the positioning in the market was at the time. So you don't know what the positioning in the market necessarily is now because COT data is released 2 weeks in delay. So we're always behind the curve. So we may not have a lot in there because of what's going on with this conflict. They may have already expired the contracts and sat on the money and put it in the Swiss or something. So you just don't know, but be prepared for a biggie, basically. There's a triple witching expiry as well. That's the stock options, stock index futures, and stock index options contracts. So there's 3 types of contract expire on the same day instead of 4. That's all it is. But yeah, those are the dates. So triple witching obviously is also today because we've got a quadruple witching because we've got 4 of them. The other 3 obviously are also there. So it's a triple witching. There you go. Good shout, Blue Trader. They're worth keeping an eye on. Should really put look, it gives you the dates. I might put a calendar together for that, just to remind me. So they're quarterly expiries, yeah? So remember, quarterly cycles, market moves in quarterly cycles. Those are your options expiries. This is the 72 moving average we are at today. Yeah. Quarterly. So it's either going to go or... But yeah, be prepared for an ADR today. We'll look at that this afternoon anyway. So I'm on at 2:30. I will be back then and we'll obviously have a look at what's going on. Other than that, I'm done for the morning. I've waffled enough. Been a good session this morning. We've covered a lot of crap, which is always good. But yeah, if you need anything else, I'll be in the Discord channel. Stopped out and flipped short on the FTSE. So yeah, I'll be in Discord and Telegram, but back at 2:30 this afternoon. Check the put call ratios. Yeah, you can do. You can use that as a directional bias, but just a directional bias. I don't trade options, and I've never known really how to take advantage of those types of moves. I'm a momentum trader, so I rely on the market knowing what to do, and I go with the market. So if the market breaks, I go with the break. That's literally it. If you've got a bias on it, and your bias is wrong, you're just going to get killed all day long. So go with the flow. Basically, is the way to do it. If this is a good example of potential. That's the sort of move that you will see. What we had in the FTSE yesterday. You'll have that. That was pre-market, obviously. That was a gap down. That was pre-market. That was the open. But that's what the potential movement that you might find this afternoon in the US. But we'll watch it. We'll watch it unfold live. I'll be back this afternoon, 2:30. So anything else you need, let me know. Other than that, I will see you next time. Have a good one.